Hi guys. Hello. Good evening. Hi guys. Good evening. How is it? How are all of you doing? Hi. Good evening. How was your week? Midway through the week, I know. Good. I'm also doing good. Thank you for asking. Today is going to be, by the way, very interesting because what we are going to do today is discuss a lot of strategies. So we are going to talk about a lot of, especially intraday strategies as well as swing strategies. So a lot of strategies means I believe we will speak about at least 6 to 7 good strategies. All right. So let's take one at a time. I want look underlying concept for all the strategy is going to be the same. I'll tell you now itself. In the sense, what same in the sense that, for example, let's say now you know that inside a channel, if you want to trade a channel or trade a consolidation, you want to look for opportunities of selling at the resistance point, opportunities of buying at the support zone, right? In between, you won't try to identify opportunities. So that core concept needs to be remain, that fundamentals need to be clear. All of you, can I accept that all of you are very clear with the fundamentals? I hope Noorji, you're doing okay. You had a minor accident, so I hope you're doing okay, nothing bad, and I hope you recover very well, very fast. Okay, so perfect. So with that assumption, let's get started. I'll just share my screen. A lot of strategies, but it'll be very fun. Rahul ji, can you reach out to the support once, and I'll ask them to check with me. Perfect. Okay, so let's get started. So intraday trading and price action trading. Now, what is intraday trading? Every one of you know. Intraday trading means we take the trade entry during the same day, we take the exit during the same day. That's simple concept of intraday trading. Now, what is price action trading? Can any of you guess what might be price action trading? Any guesses? No. You know, one common thing always remember, like we did chart pattern as well, right? So many things in that the name itself will tell you that what the concept is. So price action, that means it takes into consideration only the price of the underlying, and based on that it tries to determine what structure is there in the market and how to trade it. As simple as that. Essentially, price action trading, we don't use too many indicators, maybe one indicator just for our confirmation. Other than that, but price action trading just focuses on price. All right. So we had done at the start one Gujarati quote. Who remembers that? One Gujarati quote we had done at the very start, and that quote is like predominantly used by all the traders, especially used to trade. Yeah, absolutely. Bhav Bhagwan the, right? So they used to run the entire trading system based on this one underlying concept that price is God, right? So price is God. When you say that, that means they only focus on price. Now, if you ever meet such traders, you know they will just talk. If you ask them about, let's say, you will ask them about Nifty, they'll be like Nifty 25 430 or upper 28 940. Exact means they'll only focus on that price. They'll be like, I'm not concerned in between. I'll only focus on these two prices. When market comes to those prices, then that's when I'll take any action. So that's what price action trading means. So we only focus on the price and then we take an action. All right. So let's get started and let's see. So firstly, we will talk about intraday trading system. And I hope all of you remember VWAP indicator, right? So VWAP is that intraday specialist. VWAP is called as an intraday specialist. Why? Because VWAP only works on intraday time frame. For example, everything that we have done until now, right? EMA, pivots, Bollinger Band, can I say all of these things work on any time frame? You guys have tried it, right? All these indicators. Any time frame you might have used it, it works, right? Muted. You can hear my voice, right? I'm audible. A couple of you said muted. I'm not sure why. I'm audible, yes, loud and clear as well. So intraday, that's an indicator that is very well working in intraday basis. That is called as volume weighted average price, right? So volume weighted average price is what? Volume weighted average price is basically a technical indicator that computes the average price based on the volumes, right? So for example, if I ask you guys, EMA and SMA, which is much better? That is, which is much more reactive? Is EMA much more reactive or SMA? Okay, all of you are agreeing EMA. Now, my second question is why? Why is EMA much more reactive? Do you remember why is EMA much more reactive? Absolutely. EMA is exponential, right? Yes, absolutely. Exponential moving average. So exponential means what? It gives more importance to the latest prices. That's why it's called as exponential. Similarly, in VWAP, this importance is given based on volumes. If at a price there is too much volume, then basically the average consideration, that price will have much more weightage. If at some price there is less volume, that price will have less weightage. So that's why volume weighted average price. Is the basics clear? Volume weighted average price, how it is computed? Vishwajit ji might be at your end because everyone else, if they are reacting, that means everyone can hear me. Yeah. So volume weighted average price, right? Now, the next thing is all of us always have this thing that where are institutions looking to play? All right. And if you notice, institutions are mainly looking to play near VWAP. Why do you guys think? I'll tell you very simple reason, right? Volume weighted average price. This volume, does this volume is created by you and me, or is it mainly created by big institutions who trade in big lots? What do you guys think? Institutions, big lots, big traders, right? Big trading desks. So the idea behind this is, so what is VWAP? It gives the average price. Let's say as someone who sits in the morning and keeps trading every minute of the day, right? So what will be his average price? That will be around VWAP. So institutional traders essentially look at VWAP as their average price. That is, if they want to determine if they have traded well or not in the market, they try to understand where is VWAP and where is their average price of the entry or exit, right? So VWAP is the average price of the security. I think that is clear. It looks something like this. Now this is intraday chart, right? If you notice, this is the start, right? At the very start, it began over here. Notice this jump, notice this fall. You know what is this fall, right? This was last 5 minutes of previous day. So yesterday VWAP closed over here. Today morning market opened gap down, right? So this was the first VWAP, that is VWAP of this candle. What is the average price, volume weighted average price of this candle is here. What is the average price of both of these candles? It's here. What is the average price of all three candles? It's here. So it keeps adding based on average prices, and this is how it looks like, right? So entire day this VWAP will run. Now notice what is happening over here. This was the end of that day. Now next day morning, again there is a gap down. So VWAP again opened at a lower price. All of you, give me a thumbs up if you at least understood this basics, that how VWAP looks like and what is VWAP. All right. So I'll move on ahead. How is VWAP used, right? So VWAP is a metric or a benchmark for fair prices, right? So I just told you institution look at it like a fair price or a benchmark for their entries and exits, especially, right? So mainly what VWAP can help us with, VWAP can firstly help us with trend confirmation. So for example, very simple, like a moving average, right? So before I keep this, so if the price is above a moving average, is the market is an uptrend or downtrend? Uptrend. All of you agree this? If price is above the moving average, any moving average, can I say for that duration market is in an uptrend? That is also an average price, right? Moving average is also an average price. So this VWAP, it's also an average price, right? So underlying concept again remains the same. That above VWAP, price is considered to be much more bullish, and below VWAP, price is considered to be bearish, right? Trade entry and exits. So I'll do a specific strategy also on this, but generally speaking, trade entry and exit, how it works is usually traders try to buy when the market goes above the VWAP, and the traders look to sell when market goes below the VWAP, right? So that is the basic thing, similar to what we do in moving average, right? That's what the most of the trade entry and exits revolved around, right? The institutional traders, their main role now, institutional traders are not concerned about, this particular stock has gone 20 rupees up, 5 rupees down. They are not concerned with this. They are mainly, so how they take positions. They don't take positions based on, just like us, we went to any broker terminal, added a quantity and just hit on market price and bought it. They have such huge quantities to buy, so they can never buy their entire quantity in one single day or at one single point. They keep buying, and that's why you usually see this momentum happening, right? So they have to keep buying so that they don't hugely change the market. Now, for example, will you all agree that if you started buying at 100 rupees and by the time you ended buying, the market was at 120, will you be happy or sad? If you started buying at 100 and you're buying, and market, because of your buying, it's gone till 20% up. It does not make sense, right? Your average price will be so bad. You are buying till 120, right? It does not make sense. So institutions can't do that. Institutions have to buy in such a way that they don't change the price much far from the current market price. So they try to buy in such a way, and VWAP gives them that high liquidity point around which they try to enter or exit the market. The other way that we can use VWAP is simple support resistance. I'm sure all of you know, like how we have used the moving averages. Similarly, we can use the VWAP as well for support and resistance, right? So I won't spend too much time on it. Let's talk about proper strategy relating to VWAP. First strategy that we'll touch upon is VWAP trend pullback strategy, right? So what is the strategy about? This strategy works on 3 or 5 minute time frame. I will suggest that start at 5 minute time frame. It's much easier if you start something new at a reasonably bigger time frame. Use two indicators. That is, one is for VWAP, that is at the start of the market open. And second one you can use is the 20 moving average, right? Just for trend confirmation. So you can use both of these indicators. And the idea is you are trying to play trend pullback, right? So trend pullback means what? I'll just show you over here. We have an image for that. Only trade between the first 15 minutes after the open and 1 hour before the close. Basically, what it means is take your entry after 9:30 and before 2:30. Can someone tell me why? Why do you think this might be there? I'm asking you questions because we are reasonably covered a lot, right? You guys have been trading for some time, so I would like to hear what you guys think. Why should we not take in the first 15 minutes and the last 1 hour? Absolutely. Absolutely. So first 15 minutes is basically volatility, right? So volatility will be very high in the first 15 minutes. So it does not make sense for us to enter. We should allow price to settle down. Last 1 hour, you know what? If you take a trade, let's say at 245, you don't allow market enough time to go and hit your targets, right? So you take a trade, at least give market 1 hour so that it can go and hit your target or your stop loss and make some movement. If you take an entry very late into the day, it will not make sense, right? So that's why you enter the market only between 9:30 and 2:30. This follow this rule for any kind of intraday trades that you guys are taking. Trend filter. So basically, what you try to do, you try to understand is there is price is consistently above the VWAP for 3 to 5 candles, and VWAP and EMA both. That is an optional feature, and you wait for the price to pull back towards the VWAP so that you can take that entry. I'll show you on the charts. I think that will be much easily explained. Look for bullish reversal candles near the VWAP. Any bullish reversal, hammer, hanging man, bullish engulfing, any kind of reversal patterns around the VWAP, and that's your entry point, right? So this is the chart. Let's go into it. This purple one is basically your VWAP, right? This is the VWAP that we have. And this is how the market is moving. Now notice the market started over here, like it started at 9:50. You are in the market from here, right? This is a VWAP pullback strategy. Pullback strategy means we don't enter at the very start. In the sense, we wait for market to give us some candlestick pattern, give us some reversal around the VWAP. That's when we will look to enter. So for example, when the market is going up in this case, we are not looking to enter. In this space, we are not looking to enter. Pullback, this is called as pullback. All of you give me a thumbs up if you understand how this is pullback. Pullback means what? Market is pulling back to its VWAP, right? That's why we call it pullback. That is, market is coming back or pulling back to its VWAP zone. So it looks like this, right? So initially market is going far away from the VWAP. Market is going far. Then this movement is called as the pullback movement. Now after this pullback, can any of you identify any candlestick pattern over here? Do we have any candlestick pattern on the VWAP? I love that I have many options to choose from, but clearly for people who are giving me wrong answers, they have not copied enough in their childhood. Otherwise, copying skill would be very easy because you can read over here what candlestick pattern is there, right? So few of you, I think, sometimes answer are right in the question itself. And we have a hammer pattern, that is the bullish pattern. So this is the reversal pattern that we were looking for in the VWAP, right? So this is the reversal pattern. So after the pullback, we try to find reversal pattern. One good thing is all of you gave me the good reversal patterns. For example, the morning star. Some people told engulfing, bullish engulfing. All these are the patterns that we look for. Absolutely correct. But in this case, we had a hammer. Now, after we have a hammer, we try to enter around this point with 1:2 risk reward. Very simple as that. Where will our stop loss be if we try to enter over here? What do you guys think? Where will my stop loss be if I try to enter? Good, good. Nice. It will be below the candlestick pattern, right? This will be your stop loss. That is below the, don't keep it like if below of the candle is 100, don't keep it at 99.995. Don't keep it so close, like allow at least 0.2, like little bit far away, okay? So this is the region that you will look to enter, that is after the pullback. If the market keeps on going, if the market never pulls back, if the market keeps on going like this, are you guys looking to enter based on this system? No. Yes, you are not looking to enter. Okay. Keep your rules very strict. Now, around this point also, again, market came back. Any candlestick pattern that you guys can see over here? And sometimes the teacher will hide the answer. Yeah. Okay. Perfect. So this is also a pullback, right? So after this pullback, few of you told me looking at this candle like hammer. Some of you are like, this is Marubozu. Absolutely correct. Like all these patterns, if you notice. And if you look at all the three together, it's like a morning star pattern, right? So yes, all these reversal patterns. So after this point, you will look to enter. Again, where will your stop loss be, guys, in this case? Below the candle around here. More or less, you understood the strategy. Is it complicated that what I'm just showing? Easy to understand and comprehend? Okay, perfect. Yes, I'm coming to the target. Don't worry, I'm coming to the target. Good bit that you guys identified. Our entry is done, stop loss. The third point is missing. Absolutely. Yeah. So now over here, when you are looking to enter, your targets can be the previous swing high, or your targets can be 1:2, 1:3 risk reward. I'm sure all of you are aware about both of these things. So very simply speaking, let's say if you are someone who entered the first hammer candle, right? This hammer candle you entered. So your stop loss is below over here. This is where your stop loss is. Your targets will be around this point, right? Your targets will be around. Did your target come in the first movement? No, it did not come, right? But if you were someone who kept 1:2 risk reward, maybe in this case, this is just an example, okay? Maybe in this case, your target came, all right? So you are out of the market. For the first person who kept it as swing high, you don't have to worry. If the market comes back again, can I say this is also a place of entry? All of you can take entry over here as well, right? So you enter after this, your stop loss is below over here, and your target for the first person, it continues to be this point. So he will exit. For this person, what is the swing high? This is the swing high. He will exit over here, right? Or you can exit at 1:2, 1:3 risk reward. Okay, absolutely. For someone who exited over here previously itself, you can look to enter again over here after you got the signal. Absolutely, you can do that. Just make sure, like, start a rule, right? So, for example, like imagine like you are a soldier on a battlefield and you just have two rounds with you, two bullets with you. Okay, every single day you wake up and you get two bullets. That's it for the day. You're done. If you spend those two bullets, you're out of the game. You go up. So you understood what you have to do, especially intraday traders. How many of you want to run intraday self strategies? This is the very important rule. Imagine you're a soldier on a battlefield. You only have two bullets every day. If you spend both of these bullets, you're out of the market. Whether you make profits or not, it's irrelevant that time. Two trades per day. Start over there. After you start gaining confidence, you can increase this from 2 to 3. But make sure you're disciplined. All right. So this is how you can build your trend pullback strategies using the VWAP. Okay, guys, give me a thumbs up if you understood how the VWAP strategy is working. I'll quickly take you through the charts as well. Just 1 second. Okay, I'm sharing my screen again. I just wanted to hide it so that all of you can answer it with me. Okay, so let's get started. Okay, I'll come to that. Chandanji. Okay, let's get started. So first things first. So currently, this is how the VWAP indicator looks like on TradingView. Now, mind you, when you start on TradingView, right, and you try to add a VWAP indicator, the technicals, under technicals, you will see volume weighted average price. Okay. If you add that indicator, it will look something like this. But the green section is not important to us. So I'm going into the settings, okay, I think I can do it directly like this. Yeah. If you uncheck this bands multiplier and click on OK, this is the VWAP that we want. Give me a thumbs up if you understood, because I know a lot of you might try it later on and forget, so I don't want that. Easy, okay? So nothing, you add the VWAP indicator and this will be clicked. You just untake it so that all this green section goes away. All right, that's all. That's all that you have to do. In your fires wires, it might not be there. I think it might still be there. So just check it once, okay? Let's get started. So this is how the VWAP indicator looks like, all right? So this is the gap up that happened in the market. Let's keep going ahead. And remember, our strategy is based on retest, right? That is, we want it to retest the VWAP before we take an entry. So let's keep going. Okay. Can I say that this has established the market has moved away from the VWAP on the bearish side? All of you agree with me? Okay. Now market is coming back, but we still have to get a candlestick pattern. All right. If we want to sell, if the market starts to move higher, it's fine. Again, we'll wait for a retest. So let's wait and watch what is happening. Any candlestick over here? What kind of candlestick is this? This red one? Just a single candlestick? Absolutely. Shooting star? And if you combine all the three, what kind of candlestick is that? Evening star? Okay. So for people who have taken shooting star, who identified shooting star quite early, and for people who have identified evening star, let's see. For people who have identified evening star, just delete this. Your stop loss will be over here, right? Some points above, right? All of you, this much is clear. This will be your stop loss. For people who have identified shooting star, your stop loss will also be here. All of you agree with me? Both of you will have the same stop loss. The only difference will, one will have a bigger stop loss, the other will have a smaller stop loss based on what you identify. Yeah, I'll just change the color. Okay. Now, where can your targets be? This is the previous swing low. So for people who want to keep swing low, this can be a target. All of you, first thing clear. If you want to keep a swing low, this is a target for both kind of candlestick patterns. All right. Next, if you want to identify the 1:2, 1:3 risk reward, right? So you enter over here. Your stop loss is here, right? For the shooting star. Your target is 1:2, so somewhere around here. So your target is coming very, very fast. If you have identified and entered using shooting star, your target is coming very, very fast. And if you are someone who didn't take entry at shooting star, maybe you took entry based on evening star over here, then your 1:2 risk reward, because your risk is too much, your reward will also have to be far off. Just make sure that because it's an intraday strategy, it's not that always so far away targets will come. All of you agree with me? Because it's intraday, if your target is too far away, it might not come. Even if you are like, no, 1:2, 1:2, you can't make the market bend to your thing, right? So you might have to adjust it and might have to bring it closer, right? What exactly you did not understand, Sarthak ji? So what is happening over here? Based on your shooting star or evening star, what kind of position have you taken here, guys? You have sold, right? You have sold shares here, right? That's why your stop loss is above and your target is lower. Now let's see what happens. This is for the red guy, right? So I'll just change the color so that you can distinguish. Let's see what happens ahead. So can I say for the person of shooting star, the targets are achieved? If you have entered over here, your targets are achieved for shooting star. 1:2. Absolutely. If you have kept 1:2, it's achieved. All right. Let's see what is happening ahead. Now is the real game. For example, the swing low is also achieved over here. And as well as both of your targets are achieved. Basically, someone who looked at evening star. This won't always happen, but this happens if you have taken a trade at a very good spot, right? So make sure you're taking entry as close to the VWAP as possible so that your targets are achievable, number one, and your stop losses are also defined. Guys, understood how you can use this strategy? Give me a thumbs up. Is it anything difficult that I just showed you? Anything difficult? Not really, Vishwanathan ji. If we sell at low, isn't it a loss? Okay. No, it's not a loss. I'll tell you one simple thing. Let's say you're a basketball seller. Okay. Let's say your cost is 50 rupees. Your selling price is equal to 80 rupees. Very simple. You have made a profit of 30 rupees. All of you agree with this? Very simple thing. All right. I'm just taking a detour to show short selling. What is short selling? Okay. So you are a basketball seller, right? You are a basketball seller or trader, and you have done this. You have bought it at 50. You have sold it at 80. All right. What happens is you have done this. You have sold it at 30 rupees. Now what happens is you met someone, and you are like, okay, you want currently you don't have any stock, okay, with you, but he is willing to pay you 200 rupees for a basketball. Will you tell him no? If someone is willing to pay you, that is you are able to sell that at 200 rupees, something that you used to sell at 80, will you tell him no? Array, no, this much profit I don't want, right? Will you tell him that? Or will you be like, okay, I'm willing to sell you at 200? You will be willing, accepting that, okay, I will sell you at 200 rupees, right? So you sell at 200, and what you do, you again rush back. You again rush back to that market and you buy, that is your cost, at 50 rupees. How much profit you have made in this case? 150 rupees. In both the cases, will you agree with one thing? Profit has one simple formula. Whether you sell first, buy later, or whether you buy first, sell later, your profit has only one simple formula: selling price minus cost price. So this is the only difference between short selling and going long. In case when you identified that, okay, the market is bearish, you sell first, you buy later at a lower price. That's all is the difference. You don't change anything else. You'll always sell at a higher price. You'll always buy at a lower price. And that's the only truth of making money. Rest everything means that is something that you can't change. Got it? Okay. I hope all of you who had doubts in short selling this gets very clear. Okay? Yes, absolutely. So short selling is absolutely only possible in intraday. For your swing trading, you will have to use futures and options, and we'll come to that. Okay. From next week, we'll do that. So I hope this strategy is very clear, what we did from VWAP and the retest. All right, guys, give me a thumbs up if intraday section for VWAP and retest is clear. Now I will move on to the price action part, where we'll only essentially focus on the price. Okay, let's move on. Price patterns. All right. Okay, so VWAP is it doesn't have any inputs, right? So just like every other stock, every other indicator, we have some of the other input: 10-day, 20-day, 14-day. VWAP we don't have. VWAP simply takes volume and price. It runs the entire day. That's all it does. The next day it resets to zero. Okay. Let's move on ahead. Price patterns, because we have so many more strategies to cover. All right. So let's focus on the price patterns and terminology. So all of these will touch base one time, right? There is opening range breakout, previous day high, previous day low, previous week high, previous week low, 52-week high, 52-week low, narrow range, 7 and 4, inside bar, outside bar, and break of structure, change of character, liquidity grab, stop loss hunting. How many? I remember risk management session, stop loss hunting. We have stop loss hunting over here. So I will show you examples for stop loss hunting as well today. Okay. So this is how you can identify. Let's go one at a time. And I hope all of you are carrying, you will get all these notes. But if you're in front of the screen and you have some notebook and pen, it'll be much easier for you to, in case something is not on the slide, you can just write it down. So opening range. Opening range means what? Opening range is basically as soon as the market opens, the first 5 minutes, 15 minutes, 30 minutes, or 60 minutes become very critical. Now, can someone tell me why it becomes critical? What do you guys think intuitively? Why is first 15, 30, or 60 minutes very critical? Basically, any time frame within the first hour. High volatility, yes, but think a step ahead. Okay. You know what happens? Overnight, firstly, there is a lot of news and development that happens stock specific, index specific. It happens both the cases. Many stock development, many news development happens, right? So first thing that the market tries to do, the big traders, institutions, they try to do is the first 15 minutes, half an hour, they try to take entry and take positions, right? So if they have gotten a view, let's say that Nifty is going to be bullish, Nifty is going to grow a lot in the next 2-3 months, they will try to take positions, especially in the first 5-15 minutes, so that they don't miss out on the opportunity. That is what they'll try to. The other way how it can happen is, for example, the first 5-15 minutes, there is volatility because of this, number one, that they are trying to take positions. The other way to look at it is, for example, let's say you were short, let's say you were long, okay? Let's say you were long, you have bought something, and next day morning, the market gaps down 2%. What is the first thing that you will try to do? Exit. That's what they also try to do. They try to either exit, enter a position, manage the risk, right? And that's what they try to do. So first, that's why first time frame, the first opening range becomes very critical, 15, 30 or 60 minutes. It shows the initial fight between the buyers and sellers. So that's why it acts also like a mini support and resistance. So let's go ahead and see how that works. So for example, notice this is the first 15 minutes or 30 minutes time frame range, right? So how it happens is, initially whoever, now the big players that who have taken the positions, right? They have identified that, okay, at this point they are looking to sell, at this point they are looking to buy. So you can identify that there is a range. This is the opening range low, this is the opening range high. What time frame it is? It is the first 15 minutes. In this example, what we are taking is the first 15 minutes, that this is the lowest time frame, this is the highest time frame, right? It defines, number one, key level. So anyone who is trying to trade intraday, first 15 minutes or first 30 minutes high low becomes very critical, because market uses it as a short term resistance and support zone, and breakout from that zone can entail a good bit of trading. We'll see that on a this also chart also. Candle time frame means you take, now candle time frame, you tell me. If I'm telling first 15 minutes, now even if you're using 5 minutes, even if you're using 1 minute, 3 minutes, can I say that your lowest point and highest point for the first 15 minutes is going to be the same? Any time frame you use, the lowest time for the first 15 minutes, highest time for the first 15 minutes, so it's going to be the same. How to identify breakouts, we'll come to that. Wait a bit. So that won't change. That's the beauty of price action trading. The price is the god. So price does not change it on any time frame that you take it up, right? So meaning when the price breaks above or below the opening range, that is when we call it as an opening range breakout. That is when the high gets taken out, very intuitive. It's a long trades. When the low gets taken out, it's the short trades, right? So something like this. For example, in this case, this is the opening range, first 15 minutes, let's say 5 minute candle, 5 minute candle, 5 minute candle. So first 15 minutes, this was the opening high, this was the opening low. On this candle, the market broke out of this highs. Intuitively, will you look to sell or will you look to buy when the resistance gets taken out? Buy, right? So you will look to buy above the opening high and you will look to sell below the opening low. So for example, let's say if this is not happening and the market is in fact going down, then this is where you will look to sell. That is opening range bearishness, right? So this is how you can use. Now, when you do this very intuitively, what do you guys think? Let's say if I buy over here at this price, okay? Let's say I buy. Where will my stop loss be? Good. Oh, I like the answer. Nice. It's a typo, but I found it funny. Someone mentioned orange range. Opening range low, I think you meant. Yeah. So if you enter over here, absolutely. There are 2-3 ways you can go about it. One is you can keep it below the candle, right? One is that. One is you can keep it below the opening range low. And lastly, there is an indicator that you can use. Who can tell me? A couple of you told me already. You can use any of these 3 options you can use, and you can identify what can be your stop loss. What can be your target in this case? Again, target over here will be 1:2 risk reward. Very simple as that. Yes, you can use EMA 10 as well. Not a problem. That also gives you a good bit. EMA 10 can be a little, this at the start, it can get a little choppy. So once it captures the trend, then I think EMA 10 becomes helpful. But opening range breakout, guys, easy to understand. Any difficulty? I'll again do a thing. I'll again show you this on chart. I'm purposely trying to hide my replay with you, from you. Okay. Okay. Sure. Help me out over here. Yes, so this strategy is intraday, right? So you can do it. You can do it based on intraday basis. You can sell, you can buy, whatever you want to do, you can do. Right. So this is the opening of the market, right? This is the, okay, where is it? Yeah, this is the first 5-minute low. I'm trying to plot 15-minute high low. All right. So this is where the market opened. This is the highest point. Let's go one at a time. Okay. Can I say this high and low are confined? This high and low are confirmed from all of you. This is the 15-minute low, 15-minute high. In my example, I'm taking 15-minute. Some of you can take 30-minute as well. All right. 15 or 30-minute. Don't take any other range. These two become useful. Okay. Let's move on. Let's see what is happening. Can I say this is a breakout? What are you trying to do? After the breakout, once the breakout happens, you are looking to sell around this point. Let me change the color. Yes, you are looking to sell. What is your stop loss? You can keep your stop loss above over here, above these candle, the breakout candle. Okay, let's see what happens. And let's plot also the target levels. I try to show short example intraday because intraday is the only place you can take short trades. Okay. So around this place is 1:2 risk reward. Let's see if we ever achieve 1:2 or the market closes before that. Let's see what is happening. One second. So right now my target is achieved until now. Target is not achieved, right? When will we exit? When will we exit our intraday positions, guys? This is something that I wanted to draw with this so that all of you know your intraday positions should be exited by 3:10. By 3:10. Don't take a new entry after 2:30, but exit your intraday position by 3:10. So this is the final stop. Okay, by 3:10, I need to exit my trade. Let's see whether the market achieves my target or I need to exit. So this is the place I exited my position. All right. I still ended up making profits, but I hope you understood that what happens if your target is not achieved. When should you exit the trade? But you understood again how to take trades using opening range as well. I hope. Easy. Anything difficult that I'm showing? Right. Now, there is another trade that was available over here. Is there a VWAP pullback trade available over here? What do you guys think? VWAP pullback trade? Yes. So you guys who are trading VWAP pullback, where will you look to enter? Around this point when this shooting star came in? Yes. Okay. What will be your stop loss? Again, your stop loss will be above the shooting star. Let's say your targets will also come approximately, I think 1:2. Yeah. So your targets will be achieved around this point. So, but all of you understood that how two different strategies, but around the same day, how people are using different strategies and still ending up making profits. So it does not mean that you should only use one strategy to make profit. All right, you can use different things. The only thing is your concept should be clear. Okay. Before I move on ahead, give me a thumbs up. Understood? VWAP as well. Perfect. Okay. Perfect. Let's move on ahead. The next one that we can we take multiple entries? No. Means in the sense, yes. Means once your trade has been completed, then you can take another trade, right? In between of your trade, you're getting a new entry. Don't, right? So when you're already there in committed relationship, don't look at someone else. Just stay focused. Okay. So that's how we will go to the next trade and understand previous day high low. Okay. I could have taken food as an example also. I completely agree. Please, previous day high, come over here. So previous day high meaning the highest price. Hey, I shouldn't have distracted all of you. Come on, guys. Good message, and we'll come back to trading. Previous day high. Previous day high means the highest price made yesterday. And we are taking basically yesterday's high and low as a range, right? So we are using yesterday's high and low as a range. Because understand that yesterday, whoever traded, that was the highest price they felt was correct for that stock. that was the lowest price it's correct for the stock, right? So we will do that, don't worry. Previous day high and previous day low acts as a resistance initially. If price breaks and sustains about previous day high, trend is considering strong, good reference for breakout and reversals. All right, so let me go ahead. Previous day low means the lowest price of previous day. That's the simple meaning. Let me go on chart. I think that becomes very easy for all of us to understand. So previous day high and previous day low. So let's say this was the movement yesterday. Okay, this is the previous day. This was the movement. This was the highest price yesterday. This was the lowest price yesterday. That was the movement yesterday. Now we use both of this as a reference point today. So for example, previous day high can be my resistance point or can be my breakout point. All of you understood how this is coming? That how previous day the market price is being used today. So for example, let's say yesterday the market is somewhere around here, right? That means this was the highest price all the traders yesterday were willing to play, right? They felt any price above this is expensive for this stock. And this was the cheapest price. That means buyers are very aggressive around this price. So today we consider the same either as a breakout zone or as a resistance point. So if I find any bit of reversal pattern, I can look to sell. Or if I find the breakout, then I can look to enter. That's how I'll use the previous day high low as an example. Okay. So how are we using the previous day high low? I told you. Similarly, we can use previous week high low. Very same. As I told you right at the very start, that previous day high low, previous week high low, ORB, is it any different what I showed you in opening range than what I told you about previous day high low? Anything different using the resistance and support? Yes. So absolutely, there is nothing much difference in both of these things. So for example, let me take you to the chart over here. I'll show you. All right, very, very simple. And I don't even have to take any other example. I'll use this example itself. So for example, notice that this is the day I'm focusing on. All right. Let's say this is the day I'm focusing on. Okay. So now this is the previous day. What I'm trying to do, I'll plot the previous day low around this price, correct? And previous day high. Okay. Until here, clear how I'm using previous day low, previous day high. Okay. So now let's keep on moving ahead and let's see what is happening. Okay. Next day, market opened down. Market opened outside the range. Can I say there is an expansion happening? If market is going outside the range, can I say the market is trying to expand? You're using 5-minute time frame. Do we have to use 15 minutes? No, 5 or 15, anything you can use. I am using 5 in my example. You can use 15 as well. Not a problem. You will get the same highest price, same lowest price. All right. EMA ribbon was taught last time, even last to last time, honestly. So today I'm focusing on new strategies. Any of you want to again go behind previous strategies or the new strategies that we are discussing today? New, right? So let's focus. Monishi, if you can refer to the this again, recordings again, I think it'll be clear. Let's focus on new things. So this is the expansion happening. Market has gone outside. So now this is the support, right? All of you remember previous day low can be the support. If a support is broken, what will it become? You guys know everything. Trust me. You just have to connect that jigsaw puzzle in your mind. You know everything that I have to teach. Right? It will become resistance. Can I say it is acting as a resistance? What do you guys think? Yes. So what could you have done? Could you have sold over here? If you had sold over here, where will your stop loss be? Above this? And let's move on. Let's see what is happening. Let's see what is happening again. We all know what is happening ahead because we traded the entire day. You understood how previous day high low is becoming very potent? How it can act as a very strong support and resistance zone? Is this something new that you guys are experiencing, or you hadn't thought about it in this way? Yes. So use it. Trust me, the previous day high, previous day low becomes very good. Previous day close becomes very good. And ORB also becomes very good. Now, don't be this person who will apply everything in one chart. Okay, I will trade previous day high low also, previous week high low also, previous month high low, previous year high low, plus ORB. You will be the person who will just have like this, a chart like this. This is the chart you will have, that you will have to trade. And then you'll be like, "Arey yaar, I'm not understanding anything. Where should I enter? Where should I exit?" It'll be like this. It will look like a prison cell. So don't do this. Just pick one thing and combine it maybe with an VWAP, maybe with a moving average. That's all that you have to do. Identify a good candlestick pattern. You are smooth. Don't make this design work on your chart. Okay, trust me. Many people have such charts, and they make no money. So it does not make sense for you to do it. Okay. So yes, so similarly, previous week high, previous week low. Okay, previous week high is what is the highest point previous week, what is the lowest point previous week. That becomes the previous week low and high, right? In both the cases, that becomes a resistance point or support point or a breakout point if it is moving far away from it, right? So again, in previous week high low, it looks something like this. The previous week high becomes our resistance point. Previous week low becomes our support point or breakout point, right? So this is how it will look like. I will again take an example before I go to 52-week high. Let's go over here. Okay. So let's take in this example, all right? So this is the previous week in Nifty that was there on 24th of November. This is this week that is currently going on. What I'm marking is the previous week's highest point and previous week's lowest point. This much is very easy. All of you clear? How I picked up previous week. This is on weekly time frame. I'm asking, I know it might sound silly, but I want if someone of you is missing out that he understands, he or she, right? This is on a weekly time frame. So this is the previous week. This is the current week. I've just marked the high and low. After I've done this, I'll go on the smaller time frame. Okay. So this is 24th. This week started on 1st of December. Let's go on 1st of December and let's see what has happened. This is the 1st of December. What is the previous week high, guys? Previous week high is, can I say, as a resistance point? We had just discussed this, that it can be a resistance point, or if market moves above it, it can be a breakout. What is market done over here? What kind of candlestick pattern is this? No, which doji? Which doji? Gravestone doji? Is gravestone doji bullish or bearish? Yes, right. So notice early in the week itself, you have identified what kind of movement and the day it's going to be. Now, what this happened, it's completely, I'm not saying that this will always happen, but at least for that particular day, you could have captured trend till here. Won't you agree? If you had applied, let's say, opening range breakout over here. Now, opening range breakout is what? First 15 minutes, right? 1, 2, 3 candles. This is the lowest point. This is the highest point. This is the breakout zone where you will enter, right? So you will enter over here on this. Your stop loss will be above over here. And your target, wherever you come, keep your target. The market was so bearish that day. The market came completely down. It would have hit even 1:3. Easy or difficult, whatever I'm showing. Is there something complicated that I'm just showing? Can all of you apply all of these things? I want all of you to apply these things because it's not difficult, but it's very effective. It uses simply the price, maybe one indicator like VWAP you can use, and you can make a powerful system out of it. All right. So absolutely go ahead, apply it. The only difference between you and me is that I have applied it multiple times and you have not. And because you came to know it about today, no, I'm not complaining. But you can easily apply it yourself as well, and you can make use of it. All right. Complex, not really. I will say this is possibly the smoothest of all because it's only using prices. But definitely refer the session once more. It'll be much more easy. And even in the live session as well, when Ashay walks you through this, it'll get much more easier. All right.
Sid, hi. Hello, everyone. I just want to actually, because Sid has just covered previous day high and previous day low and previous week high, previous week low. I just want to give you guys a tool with which this can become easier so that you guys can use it also, right? So I'm just going to add it. And of course, I'm going to share with you the code for this Pine script also. So the indicator is called previous week high and previous week low. Let me see where I have saved it. Yes. Okay, so it automatically plots these four. Yes, okay, yes, it. So this automatically plots all of these 4 points, right? So it basically plots PWH. What is that? Previous week high. What is PWL? Previous week low. And PHOD is previous high of the day, and PLOD is previous low of the day. Okay? So as and when you continue trading, this will start moving, right? So you can automatically plot which is the high and which is the low of the day. Okay, so this is what you can use for any stock, that anything that you want to use, you can use it. Let's say Nifty, or I want to use it for Bank Nifty. We can always put this on Bank Nifty or Nifty also. Okay, you will see it plotting. I'll just show you, for example, how the movements happen, just for you to understand and get a, better idea of this. Let me just replay this for you so that you understand. Okay. Okay, wise. Okay, yeah. Okay. So, for example, previous high of the day, previous thing. So, 12th November was a on Wednesday. What happened? Can you see the stock opened above the previous week high and above previous high of the day? Can you guys see that? The opening itself on in the morning was above the previous week high and previous high of the day. Is that an indication of bullishness or bearishness? It opened above last week's high, not only yesterday's high, but also last entire week's high. Right. So that is a pretty strong bullish sentiment that you can see here. What is this? Is this also a gap level? Is this also a gap level? Okay. So you see how you in the morning itself you have had a bullish bias, and that's how you can use these points as that. Now this is where it is over. I'm showing in the 15-minute chart. Okay. Now that is over. Now this was the previous high of the day. This is the previous low of the day. In the morning, I'm showing in the 15-minute chart. Okay. This is still the previous high of previous week high, right? This is yesterday's high. You see, this gets broken is a sign of bullishness. So we use these points as not random points. We use these points as points of significance. Those points will be either points of support or points of resistance. Guys, clear with it? We will see those points as either points of support or points of resistance. You need to identify who is strong or who is weak. Okay, for that particular day. Guys, we have basically understood how these points are significant. Previous low of the day, previous high of the day, previous week high, previous week low. Most how the market, what does it do most of the time, guys? The most of the time it goes sideways. Most of the time the market goes sideways. You can use these points as whenever this is in the previous day high or previous week high, you can use it as a shorting opportunity with seeing a proper reversal, or as a buying opportunity at the bottom. Unless a breakout happens with a big green candle, you do not go to buy. Everyone with me till now? We are clear about the concept. I'll be sharing with you the code for this also. All right. Okay. Let's go to the next one. Okay. So next is 52-week high and 52-week low. Is it for index only? It mainly works for index. I'll tell you what it mainly works for index. And in index also, right? I think it works better if you use it as a reversal. Like you try to sell it near the resistance and you need to try to buy it near support. But of course, try to get some kind of a use stop loss. Don't press buy and don't put a stop loss, okay? Because if breakout happens, it can go down. But most of the time, we know that Nifty or Bank Nifty, they go sideways, right? They don't trend. So hence, many of you who try to do option buying make losses. Have you guys noticed that till now? Many people who try to do or see Nifty doesn't move up a lot, doesn't move down a lot. Maybe once a month it will do that. But the other days, so that once or twice a month you can take a small stop loss. But the other days, mostly it will keep going in between these two levels: high of the day, low of the high of the day, high of the week, low of the day, low of the week. Okay, previous day. All right. Okay. So 52-week high is basically the highest price reached by a stock in the last 1 year. What is the use of it? It shows a strong stock, often after an uptrend, and many traders look to buy near or above the 52-week high. Okay. Same 52-week low, lowest price in the last 1 year. Okay. This is where we have come to. So imagine this entire range from here to here shows the last 1 year price. Okay, 52 weeks, last 1 year. This is the lowest point the stock has gone. This is the highest point the stock has gone. Okay. Now, when we compare, what's the current price? Let's say the current price is 1280. When we compare the current price with the low price, is it not showing that the current price is 50% above the low? From the low, the current price is 52% above. Yes or no? The lowest price for that 1 year, the current price is 52% above that. And when you look at the 52-week high, the current price is 11% below that. Okay, so 52 high, yeah, 52-week high or low becomes a very, very important point of reference of which stocks are bullish or bearish. One rule: do not buy stocks which are going 52-week low. Okay, as much as you might think once or twice a stock has gone 52-week low and you have bought it and you have made a lot of money, it is a matlab, you are trying to catch a falling knife. Okay, you will look very cool doing it, but when it goes through your hand, it will hurt you also. Okay, so 52-week low can become 52-week low for the next year also. Can I have everyone to make this rule for themselves? For swing trading, of course. For swing trading or thing that do not buy stocks which are near 52-week low or making new 52-week low. Do not do it as a rule. Even if the fundamentals of that company is beautiful, do not do it. Because the price says what? For long investment, also don't do it because 52-week low can become 52-week lower. Okay? Do not invest in stocks which, all of you remember Dow theory? All of you remember Dow theory? A stock making 52-week low, what are the chances that the primary trend is bearish? Is there a very high chance that the primary trend of the stock is bearish? Do you want to buy any stock where the primary trend is bearish? You do not. So hence, as a rule, you do not do it. Matlab, if you catch yourself buying a stock at 52-week low, you do a penalty on yourself. Okay, you punish yourself. Okay, so please don't do it, guys. Don't do it. I'm just saying, don't do any of that, but avoid. Okay, just by following this one rule, you will save yourself from disaster. Okay, avoid that. Okay, one second is remember I shared with you guys the EMA strategy, moving average crossover strategy. You guys remember the 3, 10, 20, 50, 200? Remember one of the filters was it is near the 52-week high. Remember the one filter that we put there? It is near the 52-week high. This is why the filter is. Okay, so that's why we have very silently put that filter there. Okay, you don't want to. You want to buy stocks which are near the high because it's a very simple reason. Guys, if the price is cheap, there must be a reason behind it, right? Are you smart enough to find out the reason? If you are smart enough, then you go and buy a stock going 52-week low. If you have no clue, the company kya karta hai, do not do it. And hence 90% of you will not know what to do, hence avoid. Even I don't know, by the way, so even I don't even try. I don't even touch. I don't say that I know what the company is going to do. I don't know. So hence I only deal with stocks which are near the 52-week high. Okay, so that is one rule that we should follow for ourselves. Uh, Perfect. Now we come to NR7 and NR4, narrow range 7 and narrow range 4. NR stands for narrow range. What's the meaning of it? The meaning is today's high minus low. We're talking in daily terms, okay? We're looking at daily candles, okay? Today's high minus low is the smallest in the last 7 days. That means what is happening, guys? In the last 7 days, the high minus low difference today is the smallest when I compare that to the last 7 days. What does it mean? Price has gone into contraction or consolidation. After contraction, we know, right, that market usually see a big move. We usually see after a compression that happens, we see a big move. So it is to identify stocks which are going into compression. Okay. Traders mark NR 7 days and expect a breakout up or down. It can either go up or it can go down. We don't know, right? That's what we are looking at. Okay. Not ascending. I will show you. I'll show you an example. NR4 also, I will show you. NR4, any ideas what NR4 is? NR7 is the smallest range in the last 7 days. NR4 is the smallest range in the last 4 days. Okay. Avoid 4. 7 is a better, it's a more matlab, healthier point of view, right? If a stock is gone in the range smallest in the last 7 days, it's a better idea. You can look at this, for example, narrow range 7 and narrow range 4. Let me just show you an example here. Day 1, 80 points, high minus low. Day 2, 90, 65 points. Day 3, 75, 65, 55. And today's 30. Is this today's day the smallest in the last 7 days? It is the smallest in the last 7 days. So hence this becomes a NR 7 day. And from here, we try to look at a breakout. We try to find a breakout in a direction that we can do this. Question is, Pratik, how can we find stocks NR7? How many of you have that question? कि ढूंढे कहाँ से 500 stock में से how do we find this NR7 stocks? Okay, needless. I know that question is going to come. So hence I have an answer for you. And that answer is charting. Very simple. Very simple. It is not for intraday. It is a swing position in charting. All you have to do, right? I'll just show you how to do it, right? Even if you write uh, NR7, it should be able to give you. Okay, so it has given us NR7. Let's do it in Nifty 100 stocks and let's see if I get it. Okay, so these are the stocks which are NR7. NR7 means the smallest range in the last 7 days. The smallest range in the last 7 days. Whenever you see a stock with the smallest in the last 7 days, we can expect a breakout from that. This is what we are expecting. Okay, you see small range, breakout, big move after that. Can you see this? This yellow means this is when the NR7 was. When NR7 happens, when usually after that a big move happens. In which direction we'll have to use other tools. You see, same thing here. NR7 big move, everyone. NR7 big move, NR7 big move, NR7 big move. Can we all see that? Direction we don't know. But NR7 basically tells me compression. And when I say compression, I am expecting a big move. And you see the big moves happening after the NR7 days. Everyone understood? Candle pattern, usually if the it's a NR7, it'll be a doji only, I'm thinking mostly. Right? Mostly it'll be a very small candle, right? If it's a NR7. Candle pattern doesn't mean. Okay? So that is what you guys can do for yourself. Can you guys see here? What is happening NR7? Can you see this NR7 candles here? That means what is happening? Compression. After compression, what happens? Expansion. Can we apply long straddle after NR7? Very interesting. Yes, you can. We have not come to options, but yes, you can. Okay, everyone. Okay, that is interesting. So you know now how to find NR7 also. Very simple. You can find NR7 stocks without a doubt. You just write NR7. You will get all the list of it. You don't even have to write all of this. Yes, you can look for super trend together. Very smart. You can use NR7 and whenever whichever side, if the buying comes, you buy. If the selling comes, you sell. Of course, selling positional you can't do. Mostly be buying. If it's unless it's futures. But of course, we have understood the point. Okay. Are we clear? Can we go to the next part? Can I get a quick thumbs up if you're clear with this point? Swaminathan ji, where to specify? Very simple. You just specify it here. You just write it here now in the magic filters. Okay. Super. Inside bar. Today's high and low are inside yesterday's range. How many of you remember Harami pattern? How many of you remember Harami pattern? Same thing here. Inside bar. How many of you remember engulfing pattern? This is outside bar. Okay. So this is what inside bar means. Where today's high and low, today's range is inside the previous day's range. Okay. Then we are expecting a breakout. When it is outside, also we are expecting a reversal, right? Engulfing. Okay, so this is inside bar and outside bar. Do I need to go deeper into all of you? We have done this hundreds of times. Harami pattern, sorry, Harami pattern and outside bar. I'm just telling you, if you're looking from a price perspective, also, this is what it explains. Okay, superb. You guys have understood. Wonderful. Acha, break of structure kya hai? It's an interesting concept. I think now we are talking like the big traders break of structure and all of that, but it's not that complicated. It's very, very simple. Idea when price breaks a key swing high or low, the structure changes. For example, if there is uptrend, that is higher high, higher low, and if price breaks below the last higher low, structure weakens, possible trend change. Everyone, let's look at the thing. Can we see that higher high, higher low? Once this gets broken, this is a break of structure. So what we are essentially seeing is that previous breaks, previous swing high. So structure, let's say it's a sideways trend. Okay. Same high, same low, same high, same low. If the resistance gets broken, can we say that the sideways trend has over and now a new trend has started? The structure that was there, it's a break of that structure. So essentially, it's a fancy way of explaining Dow theory. It's basically a fancy way of explaining Dow theory. Have you understood? It's a fancy way of, matlab, if you want to sound smart, you say all this. Okay, but it's Dow theory basically. Higher high, higher low, sideways, uptrend, downtrend. Very simple. Okay, someone is finding it very funny, but yeah, it is that. Okay, do I need to push deeper on this again? Dow theory is the best theory in the world. I'm telling you. If you can apply this Dow theory in your stocks, I don't know how many of you have understood till now how powerful Dow theory is. How powerful Dow theory is. Okay, Dow theory use it for anything you can use it. Especially if you're looking at stocks for a bigger time frame, use Dow theory. So that is break of structure. Change of character. Very similar. This is like an early warning of trend shift. Again, I have covered this in Dow theory, but it is giving the term to Dow theory. Price is making higher high, higher low. Instead of making a new higher high, it makes a lower high. Then it breaks a higher low. That is, character is changed. Okay, market was behaving in bullish. Now it's behaving more like bears are taking control. Let's look at example. What is happening? Downtrend, 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 downtrend is happening. This gets broken. What have we now changed? Do we see there's a change of character here in this part? From the downtrend, it has changed character to up. Now, reversal has happened. Now, until it breaks this new high, we can't say it's an uptrend. We can still call it a sideways trend. Can this be applied on intraday also? Absolutely, yes, it can be applied on intraday. Very simple. I'll just show you. Let's just look at it. It can be applied on any chart. It can be applied on any chart. Okay. So, for example, let me just remove this. Let me just remove this. What is happening here? Okay. Can we say that this is falling? Right? This is falling. So till now structure is same, higher, lower high, lower low. Can I say this? Lower highs, each high is lower and each low is lower. Can I say that? But what is happening here? Do you see change of character here? This high gets taken out. Is there a change of character here in this part? Correct? So this is exactly what we are looking at. This is what the change of character we are looking at. This is, does this now mean the downtrend has gotten paused? Now it can do this, right? Then if it changes this, then we'll say that the uptrend is over again. Understood the change of character, which part is where it is happening, identifying that. So as the markets are progressing, you are just plotting low as a high, lows and high. And any breach of that is what you are able to understand that the character of the market is changing. Now, a lot of times the stock may, I'll just explain you something. So a lot of times the character may be that the stock is coming down, right? So immediately it doesn't mean that it will start going up after that, right? What can also happen is that the stock is going down and then it can be sideways also, guys. It can form a channel and then the up to high. So you have to understand that also. Sometimes this can also happen. Okay, but character is changing. So from here to here, one character is changing, and from here to here also one character is changing. Are we here looking at any indicator? We are just simply following the price. This is the purest form of price action trading. This is the purest form of price action trading. You are simply following price. As price is showing, you are following. Okay, you are not using any other thing. You're just following price very, very simply. Okay, change of character, clear? Like I said, Dow theory का fancy word है. Okay, so when people say Dow theory and all, people are like, oh, very old you are. You say change of character, people will think, wow, so smart. Okay, it's just that. It's basically a lot of um, dressing done on this, but at the end of the day, the logic is coming from Dow theory itself. We're just giving it a term of change of character in the market. Okay. Uh, yes. So the last thing that we have is liquidity grab or stop hunt. Liquidity grab or stop hunt. Okay. Liquidity grab. How many of you have felt like, yeah, as soon as you buy, it goes down. As soon as it hits your stop loss, it goes up again. All the time. All the time. Because you are the liquidity provider. Now, I will tell you why it happens, okay? So, look at this. This is a fake breakout used by smart money to fill orders. Okay, let me show you what is ideally happening. Okay, so what? Think of it. Okay, let's play let's play a very logical game. Okay, let's play a very logical game. Why is replay taking so long? I'll show you something. Okay. Okay, let's say now the overall structure looks bullish. Let me even go to a bigger time frame if you want. Does the overall structure look bullish, guys? Overall structure look bullish to you? Okay. Now, let's say you are someone who is buying and you buy. If you're a buyer here, if you're a buyer, your stop loss will be where? This will be a swing low. This will be where your stop loss will be, like below this somewhere. Yes or no? If you're a buyer, you will put your stop loss here. Everyone knows that. But if you know that, the whole world knows that. If you know that, that means the whole world knows that. You're nothing special. I'm sorry, you are special. I mean, in the markets, okay? So you see what will happen. That the stock is going up. Very nice, Pratik. It's going up. Now, are you changing your stop loss, guys? Let's. The swing low has not changed, right? The swing low has not changed. It's still here, right? The swing low has not changed. let's say you're trading swing low. I'm just giving an example, okay? Swing low, this is still a stop loss. You're still putting a stop loss here, but you're bullish in the market because what is happening here? Can you see? At the end of the day, it's higher. Has the structure broken? Has the structure broken? No, structure is still bullish. Okay, wonderful. So your stop loss is here. You're like, wow, beautiful. There is a hammer formation. Beautiful is happening. Okay. Now, when you do that and you have put a tight stop loss in the market, what is going to happen? The market is going to come and test your stop loss before it goes up. Has it tested your stop loss? Has your stop loss got triggered here? Do you see your stop loss got triggered here? If you put a stop loss, it got triggered here. Yes or no? All of you have put a stop loss, it got triggered, right? Once it gets triggered, you see the speed of the move after that. Okay. You see the breakout immediately after your stop loss got hit. You see the move. So the biggest move happens after this entire thing that has happened here, right? This is called sorry, liquidity grab. What is it called? Liquidity grab. Now tell me, if you are a big trader who wants to buy a lot of quantity of Nifty, okay, will you be able to buy it here? Like for you to buy, someone has to sell, right? Isn't it? For you to buy, someone has to sell it to you. Now, if people and if, for example, all of you know that यहाँ पे stop loss है, what does stop loss mean? If you're a buyer, it's a sell order, right? Stop loss means a sell order. So he also can see that everyone's stop loss is here. What will he do? He will push the price enough so that it can just break here. It just goes below this because he knows as soon as it goes below this, all your SL orders will get triggered. That means you guys will sell and he will buy all of it up. He will use that liquidity to buy a lot of quantity that time here. Now you've understood what is happening behind the scenes. Are you no, don't get angry at me. I have not done anything. People are getting angry at me like I have done anything. I'm just telling you what is happening here. Okay, let me again explain. Okay, मतलब सन्नाटा छा गया यहाँ पे. Like ठीक है, guys. This I'll give you good news. This is just I'm telling you what is happening here. How can he do this? Because he knows where it is. How will price come down? See, when as a for example, okay. If you are trading in Bank Nifty, what's the largest stocks? What are the three largest stocks in Bank Nifty? Like which controls Bank Nifty? More than 50-60%. HDFC Bank, ICICI Bank. Okay. If as a matter of fact, only two stocks, HDFC and ICICI, if you are able to like sell big quantity of that, you don't you think Bank Nifty will fall? Don't you think Bank Nifty will fall? Now to push that, you can't do it with 1 lakh rupees, 5 lakh rupees. Okay, it needs a few crores even to push that price, but it can be done. Okay. Now when you push that price lower, what will happen is you pushing you need to push. It's like a gentle dhakka. They can't push the price so much low, right? They just want to give a little push. Now someone will say little push. Someone will say, oh look, engulfing candle. They will sell. Someone will say something else. They will then use this opportunity to grab that liquidity, all your stop loss. Yes, they can sell Bank Nifty futures too to make it down. Yes, they can do that. Yes. So when your SL orders are what is a SL order? It's a buy order, right? At the end of the day, your stop loss is a sell order. Sorry. When you're buying, your stop loss is a sell order. If you have bought Nifty, your stop loss is a sell order. So as soon as this price of 58,800 comes, you stop loss and it will use that. Number one. Now liquidity grabs happens usually around these levels, round numbers. You know what round numbers are? 58,800, 59,000, 59,200, round numbers. So don't put your stop loss below round numbers. Don't put your stop loss below round numbers. Round numbers में नहीं डालना है stop loss. Can we all understand that rule? Do not put your stop loss around round numbers. Number one. Okay. Number one. Number two is that uh, I have good news and bad news. You want which one? Which bad news? Okay. Bad news is that the bad news is that it may happen that something like if you put very strict stop loss, this can happen. But a good trader, for example, you and me, one can't control that. You can say, okay, I'll take my stop loss because what? It can also come down, right? We don't know. It could also have broken the low and come down. Would you be holding on to it? No, you want to not do it. But You can use tomorrow when the gap happens, you have identified this happened and you buy again. You buy at a higher price, but you buy again because you identified what has happened to you. किसी ने अगर आपको चूना लगाया तो you don't sit and be like, oh, चूना लगा दिया. You go and get it back. This is your chance to get it back. You understand what I mean? Just to understand this liquidity grab is enough for you to go in again because you know structure has not changed. This has come back. That's the good news. The bad news is, can you avoid it? Unfortunately, you can't. Unfortunately, you can't. One way of doing it is put stop losses not exactly at the most obvious points. Okay, don't put stop loss at the most obvious points. Okay, stop loss is should be first of all not round numbers. Don't put it on round numbers. Also, use stop loss. For example, can we buy after thing? Yes, you can buy also. So if you see, for example, your stop loss has got hit and the Nifty is not going down, you can buy back again, right? Because now you understand the concept of liquidity sweep. You can understand that mostly happens in options also. Yes. Can liquidity grab happen on certain dates too? Depends. But see, I will give you an example. Have you seen a trampoline? Have you seen a trampoline? Like to jump up in a trampoline, what do you have to do first? You have to first push yourself down, right? To go up. And the lower you push yourself down, the higher you will go up. That's how trampoline works. Similarly, that's how liquidity grab works. Before the biggest move happens, right? It will come and take everyone's stop loss. Think of it, right? If there are 100 people, okay, if there are 100 people, okay, trading. Now, out of those 100 people, if 70 people have already bought, like have bought Nifty or bought Bank Nifty and are holding on to, they have a buy position in Bank Nifty. Now, if they already have a buy position, will the Bank Nifty continue going up? Someone has to buy more, right? For you, after you have bought, someone has to buy more for it to go up more, right? Now, the only way that can happen is if they make you sell and the price goes up, and then you guys will end up buying, which will push the price up further. You guys understand what I'm saying? Can be a little complicated, but like this is the mechanics of the market. That's how it works. Okay. I know we are past time. There are 100 people trading in Bank Nifty. Okay, we all know that. Now, out of 100 people, 70 people have already bought Bank Nifty and are holding on to that. They're buying, right? You guys have seen structure, you're buying onto it. Now, if the price has to go up more, that means it can only go up when more buyers buy, right? Everyone till now clear? If the price has to go up, that means the demand has to come in, right, from somewhere. The buyers have to buy again. If you already bought, then who will buy again? Now the other big player will say, "Arey boss, how will I enter? Because if I enter, I will push the price high, and these guys will sell it at profit. I'm going to face loss. Who's going to buy after me? No one's going to buy after me, right? So he has to push the price down for you to get out of position, so that the price can then go up, and then you guys buy it for the price to go up. Okay, it's funny. It's how markets work. It's brutal. It's the survival of the fittest, and that is what is happening here. Okay, it's survival of the fittest, and that's what is happening here. Some clever nonetheless. It's a clever move nonetheless. It's unfortunately how markets function. How to avoid this? If you are trading in Nifty, Bank Nifty per se, watch out for watch out for these things. Okay, watch out for these things. Another way to avoid is basically, for example, now if I do can you guys see this was the previous week low and previous low of the day? Can you guys see this? Can you guys see previous week low was this and previous low of the day was this? These points are also points for liquidity grabs. So don't place your stop losses here. Do not place your stop losses near previous week low or previous low of the day. Understood? See, I have put it in the thing also. If price quickly comes back from the previous range after taking PDL or thing, this is where it's a reversal setup. Or you can also, for example, like I said, remember, you can use these PLOD, PWL as opportunities to buy because in Nifty Bank Nifty, because this happens a lot in Nifty Bank Nifty. Like whenever it's near that and it breaks that low, right? Like gives you spikes there, a lot of people's stop loss have been taken. You can take the opposite position. Understood? You can be, if you understand how the big players are working, you can take their side, right? You can become like them. You don't have to be on the other side. If you understand, my point for you to show you is for you to understand. Clear? Eye opening for a lot of you. I think this was a lot. This concept was eye opening for a lot of people, and suddenly you may be understanding where you can put stop loss, where you can't put, and if your stop loss is getting hit, maybe use as an opportunity to enter there. So next time you think, I will buy at 100, place my stop at 95, maybe put a buy order at 95. Okay, I think that'll be better because you're thinking, Pratik, every time I'm buying, it comes down, takes my stop loss and goes up. Maybe buy there where your stop loss is. Right? So wherever you want to put stop loss, put a buy order. Best. You will always make money. Okay. All right. Super. That's pretty much it from me, guys, for this. And yeah, I think it was good fun. You guys, I think it was good. I hope you guys picked up something from today's session. And yeah, don't be scared. It is just how the reality is. Now you are better informed to make decisions accordingly. Okay. Super. All right. Yes, I will be sharing the indicator link also. Okay. I'll tell them to upload in LMS itself. Okay. Super. Chalo. Perfect, guys. Take care, everyone. And yeah, bye. Good night. See you guys soon. Bye, 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 bye. Good night. सबको ट्रॉमा होगा रात को आज कि सबका स्टॉप लॉस हिट हो रहा है. Okay, please take care, have dinner, and yeah, good night, guys. Bye bye. Good night, good night. Congratulations, Sridharji. Congratulations.